But for those that don't know what this little, Zoom is about, it's every Tuesday. We do this every Tuesday at 10 a.m. Central. And I've been doing it for 2 years, but in the more recent months, it's become more evident that real estate is very up and down. And so my husband and I have had to find all these other sources of income, all these other investments to kind of like hold us afloat. And we've done some pretty incredible things. We have a short-term rental management company, which I will be doing a course on starting next Thursday, if anybody's interested in that. But we're just like taking on all these investments and we're using our license and our audience and, all of our clients to monetize our business in multiple ways than just one. And of course, Mr. Dustin here is actually one of my clients that I've been working with for a couple of years too. And I've been dying to hear his story. I haven't totally picked his brain, but today I will pick his brain. I have about 10 hopefully hard questions for you. Hopefully. They'll be a little bit challenging for you. But Dustin did start investing in 2020, so I guess like right before the lockdowns in all the chaos. But within 3.5 years, this crazy dude bought about 150 houses. How many do you have now? Do you
We
know?
sold some, so probably, just over 100, 120 units, something like that.
Okay, so he did all of this within 3.5 years, and he wasn't from Lafayette. He didn't have a team. He didn't have any experience. He didn't know anybody here, and mainly he does like buy and hold long-term rentals. So he did all this while I know he has two babies, and he has a very demanding sales career because he's always traveling, and he's really difficult to get in touch with most of the time. So I'm very, very interested to hear his story about how he got started in all this. And I have some hopefully great questions for you along the way.
Awesome. Can you still hear me okay?
I can hear you fine. Yes.
Perfect. Well, let me just give you a preface, I guess, for everyone here. First of all, thank you. I appreciate your time. In the world of everybody's crazy busy, attention is typically the most valuable thing. So I appreciate you spending some time with me and allowing me to share my story and hopefully teach some things if you have an interest in real estate investing. I also talk quite fast. As we continue, I probably won't slow down. So I just encourage be an active listener and then we'll get into it. And then, Teresa, I hope I also know the answers to the questions that you will ask me. If not, I'll just tell you I don't know. So probably a good time to start with my story. So my name is Dustin Boudreaux. I live in Thibodaux, Louisiana now. It's where my wife is from. We were living in Lafayette, Youngsville area for about the last 5 years. And for you folks that are with in Louisiana, specifically Lafayette, I was with the company Waiter, the food delivery app. I helped build the sales team there, traveled the country, lived in a few places helping do that. We actually took that company public. I got to go to the bell ringing on NASDAQ, had my face on the Megatron in Times Square, which was pretty cool. But the whole reason I'm saying that is I always had a love for Lafayette. I had some friends that went to college at UL. I spent a lot of time there, and I always said if I had an opportunity to live in Lafayette, I would like to do that. And with Waiter, they had an office there, so we had an opportunity to go, and that's how I found myself in this place that I was not from, and that's where I would start to build a real estate career at some point. And I had came from the stock market world. I had some success in it, and I really enjoyed it. But I always liked real estate. I just didn't really have anybody in my circle that was doing rental properties and was crushing it and all the things I can do. And so my wife's family is quite large, and she would have these family get-togethers, and she has an uncle named Wayne, and he was a successful real estate broker. He had some rental property, and I would see him periodically. He lived a few hours away from us. This guy is literally 80, I think he's 82 years old now, and has the energy of a 20-year-old. It's quite impressive. But I would always ask him questions at this family event about real estate and how to get involved. And he told me something at one of these meetings that I will never forget. I still think about it to this day. He said, "Hey, if you can buy one rental property a year for the next 10 years, no one will be able to touch you." And what he meant by that was you'll have these assets that spit off cash flow and appreciation, and you'll have this wealth snowball start to build for you. And leaving that meeting, I thought to myself, and I told my wife, I was like, we have to figure out how we can buy 10 rentals in a year. And I was like, my personality, Teresa will tell you, I like to move fast. If I want to do something, I just want to do it fast. So I said, okay, how can we take this 10-year time frame and move it to like a year or a few months or something like that? And so we went on this journey and bought my first rental property literally the 2 weeks before the pandemic and everything shut down. So it was either the best time to buy or the worst time to buy. I had no idea, so I just said it would be the best time to buy. So over that first year, we bought about 10 to 12 rental properties, and we bought our first property in February. So the first week of February, we started our real estate business, the LLC. The following week on Valentine's Day, actually, we bought two fourplexes. The week after that, we were in Tennessee getting married. And so my wife's like, "What in the world are you doing?" I'm like, "Let's just do the wedding. I'll get these properties and figure it out." And then on that journey, so I had figured out how to buy a property. It was very traditional. So I saved 20%, invested the money into the deal, just like everybody hears, right? That's what I thought you had to do. You had to save 20%, put it down. And if I back up just a second, the first ever real estate transaction I did was what I would call from my personal house in Youngsville in the summer of 2019. It was two houses, one in front of the other. We were going to live in one and rent out the other one. So I guess you can say it was like a house hack. Didn't really know what that was at the time. But as we were getting ready to close on that property, the bank called and said, "Hey, we can't do the financing." I was like, "Why?" I was freaking out. We got this contract and this time frame, and something about being two properties, they looked at it as an investment, and this was like a residential company, and they couldn't do the loan. And so my agent at the time, he connected me with this bank in Lafayette that typically did commercial loans. And we ended up making that happen. But here's the part that I've kind of learned on some of the things I'll talk about on this call. I was so used to like this hearing about this seasoning event, and you had to wait 3 days and all of this red tape before you can close on a property. And the day before we were closing on this house or these two houses, I called my banker and I was like, "Hey man, we didn't do any seasoning period. I don't know like how much money I need at closing. Like, what do we have to do?" He's like, "Oh man, this is a commercial loan. Just show up tomorrow at this time with this amount of money. No questions asked." I'm like, okay, that was pretty awesome. And so we get to the close and we do this, and then fast forward a little bit to whenever we were buying these rental properties. So first, the fourplexes I bought, put 20% down, saved my money, did all of the things that you guys are probably used to hearing about. And then shortly thereafter, I was introduced to a bank that I call it like a reverse BRRRR. I don't know if there's an official name for this, but they would loan money off of the appraised value on what it would be worth after you fixed up the property. But they would appraise it on the front end as I bought it. I'll give you a really good example of this. So I'm a pretty simple dude and like things explained to me like I'm in kindergarten. So imagine if you were buying a house for $50,000, but after you repaired it, it was worth $100,000. The bank would do an appraisal based on the repairs you would do and say, "Hey, this house is worth $100,000. We will loan you 80 to 85% of the $100,000." And so now I had this money to buy the property, and then they also gave me money to fix it up, which means I was able to go to closing and just sign my name and not need any of my own money. Which the first question I asked when I heard that was, "Is this legal?" I couldn't believe that I didn't need 20% down and banks were doing this. And so that allowed me to put jet fuel on the exponential growth I had with some of these properties because my claim to fame, or whatever you want to call this with real estate, was understanding very quickly how to finance properties, what made a great deal, and then working with small and local banks because these folks can do things that big banks won't even entertain, and many of them won't even look at. And so, if you could understand what the threshold is for the bank, what the lending limits are, what they like to finance, what they don't like to finance, that is when you can really understand the 30,000 foot overview of saying, okay, this bank has a $2.5 million lending limit. This bank has a $5 million lending limit. I worked with a bank that has no lending limit, which was absolutely amazing. So you really have all of these things working when you get started of finding these different puzzle pieces where you can plug in where they work. And so I guess I'll pause right there, Teresa, for a second. That's kind of how I got started in the world of buying properties. Well, actually, one other thing. So to kind of bring this full circle before we get into some of the questions or going through this, as I was getting into buying rental property, as Teresa mentioned, I have a very demanding career, two small children, like two and one, so very small, a wife, and I was not getting into rental property investing to buy another job. I was getting into this to set up a business that would run without me, and I can just be essentially the asset manager or director moving these pieces where they need to go. So when I got involved, some of the stupid mistakes I made was trying to manage things on my own, trying to rehab properties myself, which if you want to see something pretty comical, get me to try to fix something and use tools. That is not my skill set. I'm very much a finance sales guy. But if you, for everyone that's called that's thinking about either has rental properties or want to have rental properties, you need to begin with the end in mind because if your goal is to set up a business, you will need a team, like a real estate agent, some wholesalers, banks, title attorneys, bookkeepers. And then you can really direct them on how they fit into your business and free yourself up to go do the things that you really care about, like buy more property, spending more time with your family. And for me, my career, I look at this as the way to earn a significant active income that can not only support my lifestyle, but was able to let me invest in these properties and continue to build this machine that I wanted. That way, once I was ready to use it or do whatever I wanted, it was already built. And so now I guess I'll pause right there, Teresa, just to talk about like the overview of looking at, these investments in these properties.
Awesome. That was a really great overview. Definitely gives me a better idea of where it all began. And I love that you like 10x your plan or 10x your uncle's plan. I'm reading a book right now and it's like The Art of Scaling. I think that's the name of the book. I'll have to find it and share it. But basically that's kind of the idea. It's like, okay, well, can you do one a month or like what can you do to do way more? And it just changes the dynamic of how everything has to be done because then you're forced to look at it from a completely different perspective and find solutions that you wouldn't find where it's you specifically doing all the work. So it's really genius, whether it was intentional or not. I mean, these are the things that people are writing books about today. So I think you have some amazing insight and I do have some questions and hopefully it will just kind of spark some thoughts and then help other people too just get an idea of how you ended up doing all this. And I mean, just the stuff about the banks, like commercial loans. People don't, there's a lot of realtors that don't realize that commercial loans are not regulated and how easy it is to get a commercial loan. Anyway, okay. So my first question is, and you kind of touched on this, but I really want to know more. You're mostly in the Acadiana area. I think you started in Lafayette. Why did you choose that market? And how did you evaluate the market to make that decision?
Yeah, great question. I chose the market because I lived there and I wanted to really understand experience. And also I didn't know much and I didn't know a team. And so I figured if I can start here, I can build a team, a basis, and then I can expand from there. And so that was the part of just proximity, I guess, if I had to give you a word. I lived in the area, so I wanted to understand and grow that area more. And then how I assess the market. I was just really the market piece did not come first for me. What came first for me was really, if any of you ever heard of Bigger Pockets, the podcast, the YouTube channel about real estate investing, once I kind of had this idea of wanting to invest in real estate, I spent a lot of time on there trying to learn as much as I could. I'm a huge reader. I have a pretty impressive library, which I'm pretty proud of. But everybody on these podcasts and these webinars would say the same thing. He said, "Hey, you need to go find a great deal." And I was like, I couldn't agree with you more. What makes a great deal? I didn't know like how to analyze these things, and I spent a lot of time and made a lot of mistakes understanding it. But once I understood what made a really good deal and what banks wanted to finance, that's when this market piece really came about. Like, oh, I need to stay away from this part of town, or hey, this is a really strong area that people want to be in. And then as I understood how to run deals, find deals, then I started looking at things like this is what a property rents for. This is where strong areas in the city have really good rent rates. This is where people are asking me about if I have any rentals. And so I just kind of started paying attention to the market on what was needed. And that's how I had a better understanding of the area. So Teresa, I'll give you a funny story about this. So the two fourplexes I bought were in a less than ideal area. Let's call it that. As far as, the police like to spend a lot of time in this area, whether they had some time to talk or just visit it there. I'll let your mind wander. But I would get calls from tenants, and it's like they're like, "Hey, I think we're hearing gunshots here in this neighborhood." I'm like, "Oh, that's kind of crazy." I was like, you sure it's not like fireworks or something? And then they're like, oh no, it's definitely gunshots. So the whole point in that is, you find out very quickly where those areas are that you probably want to stay away from, unless it's part of your strategy. It definitely was not part of my strategy. And so once I kind of got the lay of the land, I really went all in on the areas I was excited about, I wanted to be in, and then I knew would be really strong rental areas. And then I got rid of the things that were not great, and we're still in the process of doing that, you and I. But I really started to optimize my portfolio after making some silly mistakes.
That makes a lot of sense. And it's kind of funny because it's, yeah, like I do have different investors that don't mind those neighborhoods with gunshots and then some that really do. So it's funny. But yeah, I
Here,
guess it is kind of a personal preference. Yeah.
yes, and I'd like to build on this for a second because I don't think there's a right or wrong way to build a real estate business. I really don't. One of the cool things about real estate investing is there's so many ways you can make money, and you just have to pick out a lane that's interesting to you, and you can go out and figure out how to do it. And so for me, when you look at rental properties, there's two different classes. Well, there's more than two, but if you look at like lower rent, you're going to have issues with tenants on maybe like the quality or what they want or what they're willing to pay. But on the other side of it, but they're also great cash flowing properties. When you look on the other side of this, when you go, let's call it Class A, you're going to get much higher rental rates. The cash flow might be less because you're not getting these great deals. They're typically newer properties, but also those folks, you're going to deal sometimes they're a pain because they want the sky and everything in it because they're paying a higher premium. Which again, there's no right or wrong way. You just have to understand what asset class you're in because if you're buying a property that you can rent for 500 bucks a month, you don't want to go in there with granite countertops and very expensive flooring because you'll never get a return on that. Whenever you're looking at the higher end rental rates, that's when you go, maybe granite, higher end finishes because you'll get a higher quality tenant that is expecting that stuff and doesn't mind paying you those higher rents. And I also learned that by making mistakes on doing the exact opposite of what I just explained here.
So, how did you finance your first few deals? You kind of touched on like the accidental financing for the first one, but how did you go from the first one to the next one to the next one to the next one? And then how did I guess your approach to financing evolve over time?
Yes. So that is my favorite part about real estate investing is the financial piece. It is a big game to me in a puzzle, and if you figure out the game, you win with properties and acquisition and growth. So first property, as I mentioned before we started the business, we had this property, this house hack, these two properties, one in front of the other, that we lived in one, rented out the other one. It was always going to be a rental property for us. It was just a place where we can start, learn, and grow. That one I did a very traditional 20% down. The bank did a commercial loan and financed the other 80. And then also the two fourplexes, I also did with the same bank, a traditional 20% down, and they financed 80%. Here's another cool thing about knowing your numbers and knowing about what makes a great deal. The bank originally had pushed back on these fourplex and said, we're not sure if it's a great deal. I sent them my deal analyzer calculator, told them this is the numbers, this is where it'll cash flow, this is why I think this is a great deal, and gave them more info on it. And they're like, oh, that makes a lot of sense. We'll do the deal. So actually know
Nice.
how to present these things and pitch these to banks. Everything is a sale. Whether you're pitching to the bank, whether you're negotiating with a seller or a buyer, everything is a sale. And if you can communicate effectively, that's how you can get what you're looking for. So those two I did traditional 80/20, use my own money. And then after that, about that time, the next property I bought, that's whenever I discovered these banks that will loan money based off of the appraised after repair value. And so I did that for a few with this specific bank a few times. And then in this meantime, I was meeting other bankers and developing relationships. And that's when I learned about lending limits and banks' appetite for risk and how fast you grow. So this particular bank, the first one I was working with, I actually had a call with the president, and they have a $2.5 million lending limit. I was probably at about a million, million two. He's like, hey, look, we love what you're doing. We like loaning you money, but we think you're growing too fast. We might need to slow down. I said, listen, I understand. I am not going to slow down. So whether I do bank deals with you or another bank, Like that's okay. And then from there, I went build several other relationships with other banks that had a higher appetite for growth. And then I just said, hey, this is what I have. This is what I want to do. And now I work with probably about 7 banks. But that's how it started.
Is the deal analyzer calculator something that you created, or is it something that other people could have access to?
Yeah. So the when I first started, I paid this membership to Bigger Pockets. It was a few $100 a year, and they had this calculator. By the way, they changed it a few years ago, which really frustrated me because it's more difficult to use, and I didn't like it. But now I have my own deal analyzer I created and worked with a team to build it. And so, Teresa, I sent you a link if you want to just shoot it out at the end of the call. It's free. It's basically a spreadsheet. You plug in all these metrics, and it'll tell you if it's a good deal or not within 2 minutes. And then if we have some time at the end of the call, I can talk you through the specifics on what makes a really great deal and what are the variables you can move around to make it an even better deal, if you'd like to do that.
Well, my next question was, what is your projected return on investment, and how closely did reality match your expectations? Because I know that many times when we get into these deals, even whenever I was starting my short-term rental management company, I had huge dreams, and then once you really start getting into it, reality hits, and you have to come back down to planet Earth. So go ahead and tell us some about all that, and I will look for your link.
Yes, I sent it in the chat. If you don't have it, just let me know. But
Oh, okay. Here we go.
I think I did anyway. So when it comes to like the analysis, I learned by a lot of mistakes. Like you can run the perfect scenario, all of these things, and then you get into the real world and things don't work out as you anticipated. So one of the, I would call it major errors I made when I started is I bought these two fourplexes at the same time. They were like one street over from each other. 5 out of the 8 were rented whenever I bought them. And then 3 of them needed some repairs, some turnarounds. And my wife and I were doing that on our own, which took a lot of time after work and weekends and stuff like that. But after we got them rented, that deal, ran pretty expected. Actually, so when I bought that property, it were about $570 a month rent per unit. And then when I sold them at the beginning of this year. They were getting about 650 to 675 a unit per rent. So they went up quite a bit in rent. Um, and so there's always things, especially on this deal as well, that you really can't prepare that affect these returns. One of them is understanding the significant amount of money the city wanted for deposits to turn the water on. Uh, that was something I didn't really know buying a fourplex, and you would have to get these backflow preventers for the water tested every year, and eventually you have to replace them, and they're $1,500 a pop. And so these are all things, again, you can read as many books as you want and ask all the questions, but until you get in a specific deal, you don't really know what you don't know. And so I also learned, you know, being more conservative on your numbers is where you want to go. Because if you run pie in the sky, the best rents, the best markets, the best scenarios, you're really only hurting yourself because a lot of times it's not going to work out in the way that you might anticipate. And so I started running rents a little bit lower than I thought I can get. I started running repairs higher than what I thought it would take because typically it takes more money than you anticipate because something else is always up, maybe going wrong or needs updating. And so after the first few deals, they worked out. Actually, I have some pretty insane stories about that if you want to get into not necessarily metrics, but take away being conservative and understanding, your growth projections and where you want to be. The story I was going to get to, Teresa. So I thought it'd be a cool idea to have 2 properties that I would do ground up construction on, not knowing anything or any contractors or being from the area, start them at the same time, use 2 different contractors, and end up both having not a finished house and way, way over budget. Um, that scenario almost stopped me from being a real estate investor.
Oh no, I did not hear that story. So you will have to fill us in. Definitely, because those are all the stories that people don't hear about, and they go in thinking that everything's just going to be beautiful and unicorns and rainbows, and it's never that way. But the good thing is that we learn from every single one of them. I mean, I have also been through a lot. I'm one of the first flips that I ever did. It turns out that the contractor was using the money and going to the casino. So fortunately, the workers were telling me this very early in the process, and we were able to salvage the deal. But it is amazing some of the things that happen in these deals. But I don't regret any of them because it always taught me a lesson, and I always learned something to do better for the next time. So,
You should have asked him if he won any money at the casino and you want to split it with him for messing with the money.
right? Yeah. So, the big question that I'm sure many people have is, how did you handle property management? Did you manage the rentals yourself at first? Did you bring on the team right away? Tell us how you made this all happen amidst your, getting married, having babies, traveling the country for work, all the craziness that life entails.
Yeah, I would love to tell you I was this super intelligent person that figured it all out on the front end and this is what happened, but that's not true. So let me tell you the real story about how we got property management. So when we bought these fourplexes, as I mentioned, my wife and I were fixing these up, doing them ourselves. And my wife actually comes from property management. She managed these big complexes, and that was kind of her role at once upon a time. And so in 2020, in October or September of that year, we were going to Disney World, and we were already getting calls from tenants, and these tenants had a lot of things with them. I'll just leave it there. And my wife is like, listen, I don't want to be dealing with this at Disney World. It's probably time we look at property management and getting this off of our plate, which I definitely agreed with her. So um, I actually had, so through that bank I bought these fourplexes with, the property manager I was with, he happened to work at that bank that my banker worked at before starting this property management business. And he said, hey, you should have him come look at these properties with you. Might be a management opportunity. So in February, he actually came tour these properties with me. He said, hey, we'll manage them if you'd like. Think it's a good purchase. And so from February to October, we had everything on our own, rehabbing them, trying to market for tenants and show properties. And in October, we turned everything over to a property manager. And I should have done that when I closed on the property manager. I would have saved myself a lot of time, frustration. I would have made a lot more money because these units would have got rehabbed and turned and fixed very quickly. And then I cost myself a lot of money and time by thinking I was saving money by not using a property manager and trying to do some of this stuff myself. And so from there, once we had the property manager in place, that was a core part of my team. So we bought a property, rehabbed it, handed it to the property manager. They market it for tenants, collected rent, handle maintenance, and that took a huge time suck off of my plate where I can focus on the things that I needed to do to grow the business and look for more properties.
So was the property management company the only thing or the only person that you hired, or like how, walk us through how you built out a team and all the people that are involved in that team to help you?
Yes. So first part of the team was a real estate agent. Long before I knew Teresa, I actually, again, I did not really know anybody from Lafayette. So I actually knew a guy from a previous business opportunity I was in, and I just happened to know he was a real estate agent. So I reached out to him and said, hey, I'm going to be buying some property and I'd like to work with you. And of course, he said, yeah, I'll help you buy some property. And so that was, I guess, like the official first person on my team unofficially, right? I didn't go into it saying, hey, I'm building a team. It just kind of worked in different increments in time. And then so we worked together. And then shortly thereafter, there was a guy that he was working with. They kind of referred each other deals on market, off market, and they were a team like that. And he introduced me to this guy that was a wholesaler that worked with a lot of things that I was willing to buy that need a lot of work, couldn't get traditional financing. It definitely was not things that you were getting like an FHA loan for, right? I'll put it like that. And so he introduced him to me, and we ended up, becoming really good friends. Actually, till this day, we're still great friends. And he had brought me some properties, and eventually got to the point where he knew exactly what I was looking for or where I was buying. And he would call me and we would look at properties and see if I wanted it before he even made offers on it. And so we were working and doing a really great thing. So real estate agent, wholesaler, and then also Teresa, I believe you're gonna have him, Chris, on the show here at some point. Another big part of the team. When I bought my first ever property, Chris, who is a title attorney, I did not know him prior. He was at my closing, cool guy, young guy, and I just remember telling him like, "Hey, I hope to buy some rental property someday, man. It'd be cool if I can do that." And I'll never forget this. He said, "Oh, I have some rental property." I was like, "That's awesome. How many do you have?" And he said 45, and I could not believe it. I said, "How in the world did you do that?" I said, "You got to tell me." And so, long story short, we ended up grabbing lunch, and I became he became part of my team, and did some great things together. And here's another piece of building a team. So they might not work directly for you or you're paying them. They might be a real estate agent or a title attorney or something like that, where they're doing their own thing, but they're part of your ecosystem and your business. So with Chris, I was like, I don't know a ton about real estate at this time. I don't know that I have a lot of things to add to what he's doing. But I said the way I'm going to get around Chris is I'm going to bring deals to him and let his company close them, and he'll earn money as a title attorney. And then, we can develop this value system with each other. And then that relationship turned into a great friendship, even till today. We have some companies together where we own a lot of real estate together, and I have done every single transaction with him since that time, as far as buying property. So, real estate agent, wholesaler, title attorney. And then one of the other main strains that I took way too long to get was bookkeepers. I was trying to do all of this stuff myself on top of a day job, family, buying properties, and it was kind of getting lost and kind of put on the back burner. And so I found some bookkeepers that I was able just to give them access to the bank accounts, the property management team, all of this stuff, and they just reconcile stuff every month, and then just ask me questions and make sure that they have everything I need. And then of course a CPA, and then contractors, repair folks. Those are all part of the team. Again, they don't work directly for me. I just pay them, and they do. They have other things going on too, but they're considered my team where they help all of this go round.
And I really agree with the bookkeeper thing. I think
It's
I
one of the best
did.
investments I've made in my business, bookkeeping.
Yeah, I think with the short-term rental property management, I did it for maybe 6 months to a year before I was like, okay, I have to bring in a bookkeeper because it was insane. Like the transactions coming in and out, it just gets to a point where it's a lot. And then now basically going to be using one full, like a CPA full time to do the bookkeeping, to pay like the monthly sales taxes, all of it, just because it's so much easier. Because that is like terrible for me. Like if you want to see me procrastinate like nobody's business, get me to have to fill out a profit and loss statement because that is my favorite thing to do. Really. But
Yeah.
so because you're still talking about the team situation, would you mind sharing what bank it is that was giving you these incredible loans with the after repair value?
Yeah, for sure. American Bank. So they're in Lafayette. They have a few locations outside of Lafayette, but American Bank is the first bank that I was working with that did that. And also, too, I'm happy to make any introductions. If you guys happen to be in Lafayette, I'll introduce you directly to my banker, and then she can tell you what they do.
Awesome. So, what is the long-term strategy? Do you plan to hold indefinitely? Do you have an exit strategy? Gonna refund? Like, what's the deal? Because I know that your wheels are always turning, and you always have something going on.
Yeah, so as I mentioned at the top of the call, like I'm a finance nerd. I love numbers, business. My day job, I work with a lot of private equity people and big business stuff, and I really love that world. And so I think long term, so when I started, I did everything on my own capital, my own experience, my own mistakes, all of that. I wanted to build a track record, and then I went on to raise some money for specific deals, and that was awesome. But I think long term is, maybe start a fund, raise some big money, do some bigger deals, um, and really, see how far we can take this because if you can solve the capital issue and the deal flow, like the sky's really the limit. But on some of those things, there's obviously a lot more people involved, a lot more red tape, and a lot more time and planning. So I think long term, That's what it is. But it's the goal has always been the same, to build assets that generate cash flow that appreciate over time. That way, eventually you can build this financial wall around your life where it doesn't matter what's going on with work, the economy, whatever. You just have this thing that's continuing to build in the background of your life.
Awesome. And so you coined the phrase the reverse BBBR, right?
The reverse
So
burr,
how is
yes.
that? Yeah, how is that different from the traditional burr? Or I don't know.
You just said it right.
Okay.
Um, so if you've been around real estate for any amount of time or you looked on Bigger Pockets, you've probably heard this strategy, the BRRRR method. And so what it's an acronym and it stands for buy, rehab, rent, refinance, repeat. That's what all the R's are. So if you buy it, pretty self-explanatory, right? Then you have to rehab it, then you have to rent it, then you have to refinance it and repeat. So what I said, like this coin, this reverse BRRRR, it's kind of the same thing, but you're doing different steps and saving a lot of time. So let's talk about the benefits of a traditional BRRRR method. You do all of those things, you rent it, you refinance it, you're basically recycling your capital and you can roll that into other deals. The problem is if it takes longer to repair it, takes longer to rent it, you can't refinance it. Something happens in this world that we're in right now where the interest rates go crazy and it might not make sense to rehab it to pull money out. Those are all major issues that can really stop you in a traditional BRRRR method. If you look at like a reverse BRRRR, and I'll say this as well, I don't know that all country or cities or states or whatever do these things, but if you can find banks that do it, it's going to be awesome. With a reverse BRRRR, you are still buying it, you are still rehabbing it, renting it, but instead of refinancing it, the bank is just giving you the money on the front end based on the repairs that you're going to do, and you just rehab it, rent it, and then you're done. So when you do this reverse BRRRR, a lot of times what happens, let me go back to the example of you buy a $50,000 property that's worth $100,000 after you rehab it, the bank's going to give you, let's call it 80/20. They're going to give you 80 grand. So they're going to buy the property for you for 50. They're going to give you $30,000 to repair it. What happens is as you're drawing this loan to get rehab funds, you're on an interest only payment system. So you're just paying interest on the money that you're borrowing. So usually most banks will have this open interest only period for about 6 months to a year after you close on the property. So let's say it's a year. A lot of banks will do a year. You're paying interest only on this money that you're using. Let's say you use all of the money, so you're at 80 grand at the end of the year. What happens is the bank would just term out the loan on 15, 20, 30-year AM, and then you just start making principal and interest payments, and then you have a rental property that you had no money out of pocket. And then you just go out and do it again and again and again, as many times the bank will allow you to do it or you want to do it. So the reverse BRRRR that I just coined is instead of having to rent it, then refinance it, you're renting it, terming out the loan, and just continuing to move on about your day. So you don't have to spend months trying to rehab it, pull money out, and doing all that stuff again.
That is awesome. That's very nice, very convenient. And hopefully soon we can have somebody come on and talk specifically about that type of financing because I know that it's very interesting. And the fact that it's not really regulated and you can get away with just about everything but murder in those types of deals, which is great. And so next week, I'm going to bring on Chris, who he's talking about, who right now is managing probably about 400 properties. I don't know when he sleeps or how he does this, but I really want to find out how he's pulling it all off. So next week, I'll have him on. And I know that you have started a newsletter to help people figure out how to create these teams and to have I guess an automated system running this business for themselves. So if they want to get in touch with you or if they want to join your newsletter, how would they find you, Mr. Dustin?
Yeah. So, one, if the calculator that I shared with Teresa, I think she had put it in the chat. If you grab that, just put your name and email. That will automatically just add you to like my email list, and then weekly I send out a newsletter that'll talk through really just all of the things that we've been discussing, how to buy a rental property, your mindset, building teams, all of that stuff. So if you're interested in that, you can join. by grabbing the free calculator. And then once you confirm your email, you'll just automatically be added the into the email list. And then also, Teresa, are you okay if I just share a YouTube link?
Yeah, go for it.
Perfect.
Share it
So
all.
I have a YouTube channel as well. I publish one video a week. Actually, the one I just sent in this deal, I published it today. I do videos every Tuesday morning, and this one in particular is just going about my story about how I found out about the stock market and then real estate and which one's probably better for folks. And so I would say probably the two main things is YouTube and the newsletter. I was telling Teresa yesterday, like I have social media. I need to get better at it because I hardly ever get on it.
I didn't
So
even know you were on it until yesterday.
Yeah, so I don't I need to do a better job of that.
That's okay. You are a busy man and we understand. So I really would love to hear if anybody else has any questions. Open it up for questions for everyone else. I asked everything that I could think of, but I know that surely people who are doing this or doing something similar to what he's doing might have more questions than I do, or might be able to share some other insight as well. So please unmute yourself and ask away.
Let's see.
Surely someone has some questions. There's no link to the calculator. Oh, okay. Got it. Yeah.
I'm just trying to take it all in. I'm not sure I know enough yet to know what question to ask, but I'm taking notes and just kind of taking it all in.
Yeah, Teresa, I'm gonna share I don't know if that link there's an issue with it, but I'll share another link um that it won't be the calculator specifically, but it'll be like this wealth map I created where it'll help you gain some clarity on like what you're doing and what you want to do, and that'll get you onto the email list as well. And then if you send that, if you join that, I'll make sure you get the calculator as well. I don't know if it's a link on my end or the system or what.
I do. So when I click on the link, it almost goes directly to like a Google um, document of some kind. Okay, there we go. That one
Okay.
might be a little, that's
Yeah.
better.
Okay. Yeah.
Okay,
If you click that one, I'm not sure what's going on with the first link, but if you click that, that'll get you on the email list, and I'll make sure you get the calculator and whatnot there.
awesome. Anybody else have any questions for, look, you have this person that is very experienced. Take advantage right now and ask all the stupid questions because those are the questions that end up being the best ones.
Yeah.
If not, then hey, Dustin, if there's anything else that you want to share, some crazy stories, whatever, now's your
I
chance.
I did have a question that I put in the chat,
Oh,
Teresa.
let's see.
Do you have to have business credit for the commercial loans?
That's
Good
a great
question.
question. So what most banks will do, especially like if you're just getting started, they'll look at like your personal financial situation as they're approving you. Now, I guess let me say the loans I'm referring to. So if you go like a DSCR loan or like use a mortgage company like that, they have loan programs where they'll just look at the strength of the deal and typically run your credit and make sure all of that is good. So that's not really what I'm talking about. If you're going like the local route, they'll usually qualify you very similar like you would buy a house, right? They want to
Hmm.
see income and stuff like that. But the difference is they don't look at like send me your weekly paycheck. What they do is they go off of your tax returns. So they usually send them like 2 years of tax returns. You'll send them, and then they'll see like the money you make and all of that. And what's great about that is every time you buy a deal, you don't have to keep sending them like your weekly pay stub or whatever because they're going off of your yearly tax returns. And then so they'll just look at your tax returns, your income, and then this is something I learned on the fly with these banks as well. They want you to fill out a personal financial statement and understand what your picture looks like. And so I learned how to do that. By the way, if you shoot me an email or something, especially small banks, they're really behind on technology, and they'll send you like a janky looking PDF to fill out and write it all in and scan it back to them for a personal financial statement. Drives me crazy. So I actually had somebody clean up a sheet, make like a Google Doc where you can just plug all this stuff in and keep like a universal main personal financial statement for yourself, and then just send it to all the banks every year when they need it. So if you shoot me an email, I'll send that to you. That's been a huge help for me because I don't know if you have patience to print something out, write everything in, hopefully not mess it up, scan it back in, send it to all the banks, but I don't. So the universal one is a big help. And you can also track your net worth and keep track of all of those things for yourself on like a universal sheet, which is helpful.
Yeah, that definitely would be helpful.
Yeah, happy to send it to you. Costed me some cheddar to get this thing built, but now that I have it built, happy to share it with you.
Appreciate
Nice.
it.
Does anybody else have any questions? Or Dustin, do you have anything else that you would like to share or advice that you would like to give these folks on getting in this game the way that you did?
Yeah, I do. Actually, has nothing to do directly with real estate investing. But if you think about, I know some of you guys are on here like brand new real estate agents. Some of you are in the real estate investing game or wanting to, and some of you, I'm not sure, what you're doing as you come into this call. But one thing I've learned is all of this, the one common thing that has to do with your success is you, right? And a lot of times, our limiting beliefs stop us from going after some of the things that we want. So if I think back to that first property I bought, man, I was scared out of my mind. I was like, am I doing the right thing? Am I gonna lose all of my money? Who am I to buy this thing? I don't have any experience. I'm not from here. And I could have easily listened to that and just not did it. And I would not be on this call today. I wouldn't have a real estate portfolio, and then I would just give into these thoughts. If you have a strong desire for something, I would encourage you to do this. Write it down. That way you know it's right in front of you what you want to achieve. And then just start asking yourself some empowering questions like, hey, who do I have to become to go out and do this? What do I not know? What do I have to learn? Who can help me go do these sort of things? And when you start asking yourself more empowering questions instead of asking, who am I? Why should I do this? Your brain's going to give you answers to the questions that you ask it. So instead of asking, who am I to buy this real estate property? I don't have any experience, and your brain tells you, well, because you're a knucklehead. You shouldn't be doing this. Ask yourself instead, how can I buy a rental property? How can I find a team of people that will help me do this? What do I need to learn to go out and understand what it takes to be a real estate investor or a number one producing real estate agent or whatever that might be? And also, I was thinking about this for the call and wasn't sure if it had an opportunity to come up, but it looks like an opportunity has presented itself. So if you are a real estate agent, Teresa will tell you this, there is a very big difference from helping people buy a home that they're going to live in and helping people buy real estate that is an investment. There is two very emotional responses that are different. A house that you're going to live in, you have all of these emotional attachments, your family, you want it to be awesome in the right location, all of these things, which is important. With a real estate investment property, I'm not saying those things are not important, but it's not the first thing that comes to mind. You have to understand if this thing makes sense financially and it's a deal that you want to buy. So the whole point I'm making, if you are a real estate investor, or excuse me, a real estate agent, and you're either just getting started or you're not really sure who you are going to serve, I would recommend that you learn everything that you can learn about real estate investing and be a really awesome value add to somebody that is an investor and bring them great deals and understand what banks they can work with and go out and show them with a red carpet how they can be a real estate investor. And because if you find somebody like me that'll buy 100 properties in 3 years, I would dare to say it's probably more fruitful than somebody that's going to buy a home every 5 to 7 to 10 years one time and may or may not use you on the second time if you have a relationship with them. And so, for what it's worth, that's my 2 cents. Find who you want to serve and get really, really, really good at understanding what it takes to serve them well. Like Teresa, she works with, I know she doesn't only work with real estate investors, but she has done an awesome job of understanding the investment game and what's important and what's not important, how to talk to buyers and sellers. And as easy as you can make that for somebody like myself, it's a lot more fun to work together and then we can move even faster because we're kind of capitalizing on each other's knowledge, connections, know-how. And then that's when you can really do some really fun things in a short amount of time.
Yeah, and I definitely agree. I sort of fell into working with investors because I was doing these Airbnbs and stuff like that. And I guess what interested me was the mindsets of the investors. So I much prefer working with the mindset of an investor or an entrepreneur, and being around those people and surrounding myself with those people. Not that I don't also enjoy listing and selling a house and all that goes into that. It's just different. It's more emotional. There's a completely different ordeal when it comes to the real estate investment. It's very cut and dry. It's, does it cash flow? You know, like, do the numbers make sense? It's not like, oh, is the blue that's in this living room going to kill the deal? Because to me, that is like such an easy thing to overcome, but to somebody else, it might not be, you know? So I just really enjoy. And the thing is, he's right, because I work with a handful of investors that are constantly buying and selling. And so, and these are kind of, these are my people. This is the little group of people that I have surrounded myself with, and I very much enjoy working with all of them. They've become my friends. They're here on the Zoom. So it's just been a really cool adventure. So I definitely agree. They're a great group of people to work with. Heather's asking, how do you find investors? I have no idea. Uh, I mean, obviously, if you're, well, I guess a better response to that is there's tons of rental properties all over Lafayette. The people that own them are investors. So if you can, you know, figure out who those people are, who are buying and selling those properties, then there's your in. And she had another question. Is it small banks or larger ones that are helpful to new investors? I'm going to go out on a limb and say small, but I'm going to let Dustin answer that question better.
Yeah, it's definitely small banks. And if you can find like small banks, credit unions, things in, it doesn't necessarily have to be in your backyard if you're investing abroad. But if you can find banks that are local to the areas that you're investing in, you can develop relationships with them. One of the things I really enjoy about commercial banking is it's very relationship driven. So if you build a relationship with these bankers and you understand what their appetite is and what their business model is for lending, they will get creative and look at things in a much better light for you than like a big bank. So if you look at, you know, a big bank you see on TV, like most of the time, they don't even do real estate deals like this. They won't even look at it. You're just a number on a screen. And if you either fit what they offer or you don't. And with these small banks, once you build a relationship with them and you do a deal or two with them, they understand you, you understand them. And now with these banks that I work with, I have relationships with them. I know what the bank wants and I know where I should send the deal based on what it is. And so I would definitely say small local banks. And then just ask them that example I shared at the top of the call. Hey, if I buy a property that is worth $100,000 after I repair it, will you, and I'm buying it for $50,000 right now, will you loan me money off of the 50,000 or the 100,000? And if they tell you I will loan you money off of the 100,000, what they're telling you is they'll loan money and you can do like a reverse BRRRR. Your job at that point is to buy it right and make sure there's enough margin on the deal to do that, rehab it, and then get where you need to be.
What
Awesome.
about um, funding like personal capital?
What do you mean with the personal
Like,
capital?
so did you, because I know there's websites out there that you can ask for funding, for a project like that. Because I was looking at um last year I was looking at doing a all-in-one entertainment complex, which would have bowling, roller skating, just the whole shebang in one. And I was looking at different websites, to help with the funding for the personal capital instead of going to an actual bank for that funding. Do you recommend certain websites, or is that just like, I know you said you used your own money, in the beginning, but you know,
Yeah, I would say it depends. Is there just like a normal website? I don't have one to give you, but I would say tread with caution when you look at these places. So I actually I've done a one deal with a lender that was out of state, and he actually came highly referred to me from a great friend of mine. And this guy promised me the moon and everything in it. And after we got into the deal, every step of the way was something different. And it was the worst deal on the financial side I've ever done. I refinanced it not that long ago with a local bank, and I cannot tell you how happy I am to be out of that. So, what I would say is tread lightly and have a very clear understanding of what they're going to do for you, what the expectation is, how much it's going to cost you to borrow that money, because people don't loan money for free, right? And so, probably something else, if I were doing a situation like that, I would try to tap into my network and raise money from people that I either knew or referrals and see if they're getting some sort of return from a passive perspective, or even if you were looking to partner with somebody that might have the money and you can do more of like the groundwork, the sweat equity, put it all together and create some sort of win-win situation. That will probably be your better bet of raising private money yourself for your returns and the pleasantness of doing that. Because whenever I started raising some money, I would raise money for specific deals. And then my pitch was just like, hey, I'm going to raise some capital. I'm going to pay you a 10% preferred return on your money. And then we'll do a short-term note and I'll just give you your principal back if you don't want to reinvest it again in my business. And what happened was most of them just kept reinvesting with me and I just pay them monthly interest only payments. And you can do like a promissory note. Here's another thing. If you raise money, have a very clear expectation with written promissory notes on who's doing what, how much money, time frames, interest rates, all of that. The way you stay really good friends with people and family is to have all of that figured out before you accept money. Do not do deals on a handshake. I'm not saying people aren't trustworthy, but when there's money involved, there's a lot of emotions involved, and you want to make sure everybody's very clear on the front end of what that is before you go down that path.
That is good advice. I can tell you from experience, you really don't want to start going down the rabbit hole of just, finding financing online. There are some very predatory things that happen online. And so sticking to local banks and to people that that maybe want to get together and help out with funding is definitely a better option for sure.
Yeah, and
I
also
definitely
too,
agree.
my personal thought is, there's no amount of money that's worth more than a great relationship. So whenever you have people you're bringing into this business and you're excited about it, walk with integrity in what you're going to do and make sure they understand this and make sure it's not money they need to feed their family next week. And if you do a really good job of that before you partner with somebody or take their money, I'm not saying you're not going to have challenges. It's business, it's the real world. There's things that are going to come up. But if you have a really strong foundation on that before you accept money and get in a partnership with one another, it typically goes a lot smoother when things do come up and there's some issues you need to work through.
Absolutely. Well, Dustin, I appreciate you so much. We're right at the 11 o'clock mark, so I'm going to let you run so you can get back to your day. But thank you, thank you, thank you for coming on here and spilling the tea on how you made this happen so quickly. It's pretty
Yes, Teresa.
amazing.
Yes, thank you for having me. I'm so excited to be invited. I appreciate all you guys' time. And also, make sure you jump in next week. Chris is awesome. You're going to learn a ton from this guy, and he is a high energy dude as well. So I'm excited for him to be on the show next week, too.
Me too. Thank you.
All
Bye,
right.
guys.
Bye,
You
y'all.
have an
Thank
See
you.
ya.
amazing day.